Hi, my name's Nick Grantham. I'm a CPA from Decatur, Texas. And today's video is going to be talking about LLCs. We're going to dive into topics such as what does the LLC do for me? Should I create an LLC? And what are the different LLC types and how does that affect my taxes? So, if you have a business, maybe you are working a side gig, or you have rental properties, today's video is just for you. So, let's start out talking about the different LLC types. So you can start an LLC as a single member LLC, and the IRS will view that as a disregarded entity, meaning nothing will actually change on your tax return. You'll still file with either your Schedule C for your self employed business income or maybe a Schedule E for your rental property. But being a single member LLC, that's really a state entity and not an IRS entity. So this means that setting up the LLC doesn't really help you tax wise as a single member LLC. But what it does give you is liability protection. So if you have a rental property and you don't have an LLC set up, right off the bat, I would recommend setting up an LLC to give you that liability protection. And you want to set it up in the state where your rental property is located, right? So maybe you've seen videos where people recommend setting up an LLC in Delaware or Nevada. Well, no, that doesn't really help you because if your rental property is in Texas, then you want your LLC to be active in Texas. So even if you set up in Nevada, ultimately you're going to have to register that LLC as a foreign LLC in the state of Texas so that your rental house in Texas is getting that LLC protection. So, first and foremost, I always recommend setting up your LLC in the state where either your business is operating or your rental property is located. So, why should I set up an LLC for my rental property if it's not really giving me a tax savings? Well, it's simple. It's for liability protection. So by default, like I mentioned, you can set up a single member LLC. You can get your rental house transferred into that LLC. And then if someone is renting your property and hurts themselves or something goes wrong and they decide that they want to sue you, they're suing the LLC and it's giving you personally and your personal assets protection from the lawsuit. So if you have 15 or 20 rental houses, then you might actually want to think about setting up multiple LLCs so that you can spread out that liability. You could set up one LLC that has, say, 10 rental houses in it, but if you have, you know, 200,000 in equity in each house, well, that's a lot of equity inside that LLC. So if someone sues you, then they could potentially come after the rental houses and ultimately the equity that you have in your LLC. So you can set up different LLCs for each property. You can put multiple in each, but it's ultimately how much you'd like to spread out that liability. So there are ways to spread it out, such as series LLCs, or really just creating numerous single member LLCs. And ultimately, on your taxes, you'll still file the same way on the Schedule E of your 1040 tax return. Now, on the other side of this would be an operating business, whether it be a side gig or maybe it's your main business where you're operating kind of your livelihood, subject to self employed income. So, the reason that setting up an LLC makes sense in this situation, even if it's a side gig, is again, it gives you that legal protection. It can also, though, be the first step in saving taxes. Okay. So, by default, by setting up the single member LLC, you're not really saving any taxes, right? You're still reporting your income less your applicable deductions on the Schedule C, and whatever you get, whatever that net income on your Schedule C is, will be subject to your federal income tax and self-employment tax, right? So that self-employment tax is 15.3%, Social Security and Medicare. Okay, so that can be a big hit once your self-employed business activity starts making money. Now, contrasting to rental properties, rental income on the Schedule E is not subject to the self employment tax, right? So, setting up your rentals in a single member LLC is great. Having them on your 1040 Schedule E makes the most sense. Now, on the flip side, with this self-employed business on the Schedule C, that net income is subject to the self-employment tax at 15.3%, meaning at a certain point, we want to think about converting our LLCs to an S corp for these operational businesses or side gigs, not for rental properties. Now, the rental properties and appreciating assets, we don't want S corps set up for those, right? But for operating businesses that are subject to this self-employed income, self-employment tax, we want those set up so that once they grow big enough and once that net income is 50,000 or more per year, that's usually the fine line that we recommend considering converting from single member LLC disregarded entity to S corp, right? So this process, it's actually very easy. Your LLC will still be an LLC in the state, but as far as the IRS is concerned, you elect S corp status and you start filing your business, your single member LLC. You start filing as an S corp, and so what that means is we're able to split the business net income into two buckets: the self-employed bucket that's subject to that Social Security and Medicare tax, and then the other bucket is almost more like investor income that gets to avoid that 15.3%. So the way this works is when you convert and elect S corp status, you start paying yourself, the business owner, the member of the LLC, you start paying yourself a salary as an employee. And that salary needs to be reasonable, right? But kind of the goal is to make it as small as you can. And that salary is going to be subject to those payroll taxes, those Social Security and Medicare taxes. It's that 15% that we mentioned, 15.3%. But anything you make above and beyond your salary, you can transfer to yourself as owner distributions, owner draws, and that is not subject to that self-employment tax. So you're saving 15% on the amount that you make above your salary. So the S Corp election is great for a business where you're operating and you're subject to that self-employed income. And so, like I said before, the golden area is 50,000 net income or more. That's when we want to convert and make sure we have an S corp. Now, like I mentioned earlier, I want to go back to the rental properties, back to asset holding companies. We want these LLCs to stay as disregarded entities. We do not want S corp status for these. Now, they can be partnership LLCs, so that that would just be multi-membered and they'd require their own tax return filing, but they would not be S corp. We don't want corporation status with the IRS because the big reason is if you have appreciating assets inside of an S corp or a corporation, well, then let's say you pass away and your children are going to inherit these rental houses. Well, because it's in an S corp or a corporation, it's not subject to the step up in basis. So they would just get a rollover basis. So if you bought, let's say you bought a rental property for 100,000, um, you had it in an S corp, you took some depreciation throughout the years, and then 30 years later you pass away and your daughter inherits this rental house or this this S corp LLC. Well, unfortunately, if she turns around and sells that rental house because she doesn't want to deal with it, well, she's going to have a big capital gain that she's going to have to pay tax on. Whereas if you had your rental house in a disregarded entity LLC, not a corporation, right? Then when your daughter inherits it, it gets a step up in basis to the fair market value. So then when she sells it, there's no gain if she sells it immediately because the fair market value is ultimately her sales price. So we always want to keep appreciating assets such as rental properties inside of LLCs or partnership LLCs, but we do not want them in corporations if at all possible. So when we're talking about the S election and converting an LLC to an S corp, that needs to be for an operating business, a side gig, something where you're making that self-employed income, not rentals. So again, LLCs are great. We highly recommend them for anyone who has rental properties, or some type of self-employed business, because again, it gives you that legal liability protection, and it can be the first step to saving in taxes by eventually converting to the S-Corp for those businesses where you're subject to self-employed income. If you found today's video helpful, please give us a thumbs up, consider subscribing, and leave a comment below if anything wasn't clear or if you have any questions or future suggestions for videos. Thanks so much. Bye.